Hello, good afternoon, everybody. Sorry for the delay in the beginning because we had some technical issues in connecting because we do have different speakers from different time zones in the world. So there are some kind of technical issues. However, we are trying to get them all onboarded. First of all, thank you for attending El Baraka Bank Egypt side event at COP 27. Honestly speaking, Al Baraka Bank Egypt has a long track record of Islamic finance in Egypt for over more than 40 years in Islamic investing and financing customers. We are part of a group that is represented in almost 40 countries, 17 countries. We had this kind of a chance to be at COP because Al Baraka Bank Egypt has adopted a really transformational journey has started this year, and we put the sustainability and green finance and sustainable finance and create a climate positive impact at forefront of our strategy, and that's why we are here today. Actually, we have taken some steps in this front. We have succeeded to build a kind of an 200 million pound an SME portfolio that is among green finance, transition green finance, green investment and investment impact. We have also did kind of new product offerings that part of our product suite that really cater for sustainable finance and sustainable impact. Also, we have measured our carbon footprint for the first time for our head office, and we have avoided a quite good number of carbon emissions, and we do have a very solid plan for reduction this emissions that will be implemented across our head office in Egypt and across our branches as well. So the purpose actually of this panel or the idea of this panel was created from the theme of the COP, which is together for implementation. That's why we are connecting together three dimensions. The first dimension is the Islamic finance with its purpose to serve the livelihood and to serve for good for people. This is the first dimension being an Islamic bank. The second dimension is the relation and its impact on sustainable finance, sustainability, and green climate. And there is a positive linkage between Islamic finance and sustainable finance. And third dimension is the impact of all of this on the small and medium enterprises. How do they face the challenges? How we can help them in order to overcome these challenges and to capture opportunities for them. And actually, this brings me directly to our group of speakers. We have a great honor for having them because we have a lot of diversified portfolios from multilateral organizations like the IFC, people specialized in SMEs, people specialized in investment private equity funds, people specialized in ESG and Islamic finance. And allow me in the beginning in order to introduce our speakers. I will start with Dr. Sina Habous. Dr. Sina has an overall professional experience of over than 17 years in the diversified field of sustainable development. She has two master's degree in international affairs and developmental study from Lebanese American University and the London School of Economics. She is currently advising and consulting several institutions on reporting, sustainability, governance, and sustainable finance for UNEP FI, ISDB, Insurance Federation for Egypt, among others. Mr. Yavar Mayuni, he is a senior investment officer in IFC Africa. Mr. Yavar has over 29 years of experience of banking with international, supra-international, and regional institutions, mainly in the GCC. He is currently a senior investment officer for International Finance Corporation and is the sub-regional anchor for the advisory business for the Middle East, Pakistan, and Afghanistan. Mr. Riyad Naur, manager for advisory services Middle East and Africa Financial Institutions Group at IFC. He is a developmental bank leader with more than 20 years of experience working in financial sector, building accessible, affordable, and sustainable SME banking service in emerging markets. He has extensive industry and regional expertise working with private and public sector partners. Mr. Matthew Leonard, a microfinance, a digital finance, and livelihood specialist with over 15 years of experience in community and international development focus on financial service and youth, currently managing digital finance and microfinance advisory projects across Middle East and Sub-Saharan Africa for the IFC. Mr. Sifullah Demirlik, he is head of Al Baraka Turkey Investor Relations. Mr. Sifullah is experienced vice president of strategic planning, corporate performance management with demonstrated history of working in the Islamic banking industry. He is skilled in financial analysis, strategic planning, corporate performance, and sustainability. Mr. Abdulaziz Abdel Nabi, he is a co-founder and CEO Catalyst Partners Holding. Mr. Abdel Nabi is launching first impact investing fund in Egypt and Middle East with focus on SMEs. Prior to funding Catalyst Partners Holding, Mr. Abdulaziz had co-founded Delta Investment Banking, which was acquired by Arabia for investment. Mr. Hatem El Gamal, he is the CEO and chairman for Empower New Renewable Energy. Mr. Hazem is an entrepreneur who holds a BSc in pharmacy and an MBA in marketing and management. He established the waste to energy market in Egypt, and he is the CEO of Empower Capital, who participated in the issuance of industry-related legislations. He developed high-quality fertilizer of organic waste, having positive impact on the climate and enhancing food quality. I will start directly in order to save time for our distinguished guests with Mr. Yavar Mayuni. We want to have his insights about mainly the global ESG bond in 2021. Mr. Yavar, issuance surpassed 1 trillion US dollars, growing 70% annually from 2019 due to COVID recovery measures. In 2022, economic uncertainties reduced issuance to USD more than $400 billion in the first half. In the first half of 2022, green and sustainability sukuk were worth of 4.4 billion US dollars. From your point of view, why do you believe there is a growing potential for green sustainable sukuk in achieving the SDGs? Over to you, Mr. Yavar.
Yes, thank you very much for that introduction. Before I directly address your question, let me just re-emphasize a point that you made in relation to linkages between Islamic finance and sustainable finance. The great stress in Islamic finance is to invest in the real economy, to basically create a better environment. There is, in the swing of Islamic finance, be it commercial banking products or sukuk, there is an asset base that is required. And therefore, what you are creating are asset-backed or asset-based instruments of financing that stress investment in the real economy and basically our interest or usury, as we call it. So you are the actual and moral imperatives that govern Islamic finance are all about ethical finance and therefore very closely related to the idea of sustainable finance. So I just wanted to start by saying that there is a natural linkage, as you pointed out as well, between Islamic and sustainable finance for these reasons. Now, again, as you said, the ESG bond issuance market in 2021 crossed the $1 trillion mark. Overall, sukuk issuance, if I could just sort of talk about that and then sort of lead into the potential for Islamic finance. Sukuk issuance in all outstanding ESG-related sukuk is at about $21 billion. So you can immediately see the disparity between the conventional ESG bond issuance market and the Islamic sukuk issuance or ESG sukuk issuance market, 21 billion versus $1 trillion. And that is the potential. If you look at basically the capital markets in Islamic finance, there's a total outstanding sukuk in the range of about 730 billion as of 2021. So what we are saying is that barely 3% of that comprises ESG sukuk, right? Again, there is great potential to increase the issuance of green and sustainable sukuk. What we have seen is basically great development in different types of sustainable sukuk. We've had Etihad Airlines issue a transition sukuk for $600 million in 2020. We've seen the sovereigns of Indonesia and Malaysia. We've seen sovereigns of Indonesia and Malaysia become pioneers of this field. Indonesia, in particular, has issued about $5.5 billion of sustainable book, whereas Islamic Development Bank has issued almost the similar amount. So out of that 21 billion, that's about half of it accounted from these two issuers. And issuance in terms of green sukuk, again from the GCC and Southeast Asia. So there is a great opportunity to increase issuance from other jurisdictions in the Islamic world, including Egypt, for these type of instruments. And also, I would say that moving beyond capital markets, if you look at the total Islamic industry, it's about $2 trillion in terms of assets, right? And sukuk issuance or capital markets, as I've just sort of laid out, is about 26% or so of that entire unit, because I said there's about 730 billion or so of sukuk in that sort of $2 trillion of total assets. What that sort of creates is the potential to create great green financing. I'm sure my colleagues from Al Baraka will delve into how they have sort of made that journey with their sort of banking products into green finance. But just linking the initial points that you had in terms of sustainable finance, multilaterals, and also SME finance, the greatest propensity for Islamic finance comes from two market segments. One is the retail segment, and the other is the SME segment. So that is the natural linkage now. What we can do is to understand the value chains of the green economy in each jurisdiction. These are essential to that value chain, and then we can develop the product from both the commercial banking side and the capital market side to do a green or sustainable Islamic finance. Because you are appealing to the largest market segments that have, or the market segments that have the greatest propensity for Islamic finance. So I think with these opening remarks in terms of Islamic banking and capital markets, I'll stop there and leave it to my colleagues to delve into the role that Islamic finance can play or banking can play in terms of SME and sustainable finance. Thank you.
Thank you, Yafar, so much. Actually, you have touched based about different aspects and different insights regarding the linkage between Islamic finance and sustainable finance as well. Now I will be moving to Dr. Sina and asking her about how do she see to evaluate the endeavor toward the transition finance taxonomies, which identify whether and how assets are linked with emission reduction goals, and how it would benefit emerging markets and developing economy issuers by better signaling present and future climate benefits from her point of view as ESG expert.
Thank you so much, Wasim. I'll start maybe with a focus on Islamic banking, because now I'm working on a study assessment for Islamic finance and climate change in the MENA region. And one of the major barriers that's facing banking in general, Islamic banks in particular, is the lack of information, access to guidance, understanding in the market, and one of which is the lack of existing taxonomies, which affect the assessment, affect also the design or the offers that Islamic banks can provide to their respective markets, because they cannot really assess or name a project to be climate neutral, or can identify it as part of or in alignment to Paris Agreement or the policies of the respective markets and the countries they house. This is one of the main problems. However, I have to say that there's a number of endeavors now taking place by Islamic organizations, and regulatory bodies to address so. For example, there was an attempt to align the Islamic taxonomy to an EU taxonomy by the Islamic Development Bank per se. Also, Malaysia, which is a leader in Islamic finance and in sustainable Islamic finance, have created a sort of a taxonomy with the focus on climate mitigation and adaptation, and has urged the private sector and Islamic finance institutions at large within the country to utilize it. Hence, there is a need to create an enabling environment in the MENA region per se, in Egypt and other countries, by creating a Sharia compliant or an alignment with existing international taxonomies, yet adapted to local knowledge. This is very important. Another also important part is that there is a need to integrate ESG targets and performance indicators also within Sharia governance frameworks, which is missing in the MENA region as well. These issues lead to a certain kind of reluctance to embark on climate finance or to understand with clarity the opportunities that exist in respective markets to endorse climate opportunities within Islamic finance in the region. Also, there is a rising trend in tailoring and designing standards that will address these gaps by international Islamic organizations such as IOFI, SIBAFI, and the IFSB, the Islamic Services Stability Board. And all of these now are working on standards that will align and acclimate مقاصد الشريعة to international standards when it comes to climate, specifically climate and ESG. And this is very important because this will unify or provide a unified framework that will enable cross-country or regional investments by banks, the issuance of Islamic-linked ESG sukuk, green sukuk, that can address certain market opportunities within the climate framework in different markets in the region. So all these attempts or acceleration to provide policies and enabling environment, access to information, taxonomies will definitely encourage Islamic banks to mainstream climate consideration within their operational model, will provide them with the knowledge and ease of the framework, at least a baseline framework where they can identify climate friendly or climate adaptation or mitigation projects that they can invest in. Of course, this is in alignment with different market opportunities that differs from one country to the other. Thank you, Asim, so much.
Thank you, Dr. Sina, so much. Now we'll be moving in a different type of the discussion that we have our colleagues in Al Baraka Bank Turkey, that they had a quite good journey in the sustainability and green financing and climate positive impact financing, that will be leaving the floor to them to share with us their journey, how did they start, what kind of a challenge they have faced, and what they have achieved, because we are trying to connect the best cases and the best success stories from different emerging markets, because we need to learn from them. We need to get the similar cases from the similar markets that we have. So the floor to Al Baraka Turkey.
Good afternoon to you all. Thank you very much for having me to share Al Baraka Turk's experience on sustainable finance and other sustainability initiatives. I'd like to present Al Baraka Turk's experience on its journey to become the leading participation bank in sustainability initiatives in Turkey. But before talking about our own experience, I'd like to say a few words about the increasing importance of sustainability in emerging markets, especially from the Islamic finance perspective. Islamic finance offers good opportunities for promoting green finance initiatives against the incapability of conventional finance. Can we have our presentation on the screen, please? Thank you. So we can move on page 3. We can move to the next slide, please. So as can be seen in the slides, decrease in greenhouse emissions has been turning back above pre-pandemic levels. As we all remember, during the COVID-19 pandemic years, economic activities across the globe had slowed down. Therefore, for a short time period, greenhouse emissions reduced. But unfortunately, it is again in an upward trend. And if current policies remain the same, the Paris Agreement goal for temperature decrease cannot be achieved, and consequently, the world may face the worst case scenario, which indicates 3.6 centigrade temperature increase. And we can move on to next slide. And the temperature increase is not the only risk we may face as the whole world, actually. There are some other severe risks regarding environmental, social, and economic risks. You can see there are climate action failure risks. Extreme weather is also a risk. Biodiversity loss could be faced in the next coming 10 years. And on the social side, social cohesion may erode, and livelihood crisis may rise actually in the coming years. And we may also face some debt crisis and some geo-economic confrontations. And we can move on to next slide, please. And can we come to page 5? Is it page 5? Is it? Yes. Conceptually, we can say that sustainability has a short history. First time in history, in 1972, sustainability term used in a report, and in 1987, we see a well-defined definition of sustainability addressed by the Brundtland report, saying that sustainability is the meeting the needs of present without compromising the ability of future generations to meet their own needs. And after that, in 1997, the Kyoto Agreement was signed, and in 2015, Paris Agreement was signed, and 191 countries joined the agreement, and 195 countries became a signatory. And we also have the EU's UNDP's Sustainable Development Goals. As Al Baraka Türk, we are working on contribute 7 of all these sustainability goals, actually. So we can move on to next slide, please. Actually, sustainability doesn't have only one dimension. Sustainability also covers social and governance-related issues. Thus, sustainable finance aims at integrating environmental, social, and governance criteria into financial services, and also supporting sustainable economic growth. I will not go into details of all ESG dimensions because of the time limit. So we can move on to next slide, please. If we talk about sustainability for financial institutions, especially the banks, since the banks are the most crucial actors of financial systems, sustainable finance will be, in other words, must be a regulatory requirement, a commercial imperative, and a social responsibility. And the latest experience of the pandemic we all faced helped the banks understand the importance of sustainable finance, since increasing interest by investors, also regulators show this increasing importance of sustainability. So we can move on to next slide, please. So we can skip this subsection and move on to next slides. When we talk about the incapability of conventional financial system, the conventional financial system leads to wealth growth beyond real economic growth, actually. This also leads to an increase in the income distribution between the rich and the poor. The graph on the left-hand side clearly shows that the top 1% of the total population in the world gets the largest portion from the total global income, and it has been increasing its share steadily. But on the other hand, 50% of the bottom of the total population in the world has only about 10% of total income, and its share has been remaining same. So we can move on to next slide, please. So the conventional financial system has not been only producing especially financial crisis, but also causing increased income inequality. So we can move on to next slide, please. So the main driving force of the global financial system is the debt, actually, which exceeds triple of the global GDP. Debt to GDP ratio can be seen in the graph for the global economy is about 349 as the year end of 2022. This is a real threat for the global social welfare, we can say. So we can move on to
Mr. Sefalla, actually, I have seen that you are sharing with us very quite insightful number about the global economy and the moving and the transition, the difference between the impact on from conventional banking and Islamic banking. I would urge you, and actually I would like to focus on your success story in Baraka, Turkey, because you have a real sustainable banking strategy plan that had very good effect on the sustainable finance portfolio that we really want to have discussion around it. So can we get this kind of a sustainable banking strategy that you have in place?
yes, we can. Sure, we can do that. So we can skip some of our slides. So we can move to last part of the presentation, and then we can talk about our initiatives regarding sustainability. So we can skip all these slides. Directly, we can go to page 24, actually. From these slides on, we can talk about Al Baraka Türk's initiatives and Al Baraka Türk's journey to become the leading participation bank with regards to sustainability, actually. As can be seen on the slides, Al Baraka Türk has been reporting CDP, Carbon Disclosure Project, initiated an NGO based in London. We successfully reports the Carbon Disclosure Project, which have a good guideline for environmental issues for all companies across the globe. So by reporting CDP, Al Baraka Türk already reduced its own operational greenhouse emissions and water footprints, and in line with the Carbon Disclosure Project's guideline, We are now working on Scope 3, which covers not only Al Baraka Türk's own operational greenhouse emissions or water footprints, also includes credit side. So we are now working on the infrastructure of sustainable credit reporting. By doing that, we'll be able to develop a sustainable sustainability green finance credit rating for our credit customers, and we'll set some specific targets for reducing our credit customers greenhouse emissions and water footprint. So we are working with science-based target initiatives for the validation of our credit sustainable green credit infrastructure system. Apart from those initiatives, Al Baraka Türk is working on it is a zero waste project in our premises, especially in our headquarters. We have been already reduced our waste production, and we have a headquarters which has been certified as the Turkey's first LEED Gold certificate. Apart from that initiative, Al Baraka Türk is the only participation bank listed at the Istanbul Stock Exchange, and we've been listed in the sustainability index of Borsa Istanbul since 2019. The assessment for this index has been executed by the Refinitiv, a subsidiary of Refinitiv, we can say. It has a good guidelines, not just for environmental issues, also for social and governance issues. We have been passing their assessments very successfully for the last 3 years. And we are also working on some other initiatives. I will mention about them in the coming slides. But we can move on to next slide now. Reporting and communicating sustainability activity is crucial for successful sustainability strategies. Therefore, we have been reporting our sustainability initiatives and result of strategic goals for the last couple of years. So if you wish to have a look at our sustainability reports, please visit our website and you can access to our sustainability reports.
Thank you so much. Thank you so much, Mr. Sifallah. Actually, bringing an example from other emerging market and other peer in our group is really something that we see it. We have to share our success story. We have started our journey and we need to get the benefit out of each and every member in our group. That's why we are having a kind of a story from Turkey. Now I will be moving directly to Mr. Riyad Naur from the IFC and his specialty in SME banking. And I would like to tackle a very important point is building on what we have seen from Al Baraka Turkey. Can Islamic financial institutions develop innovative funding models that can help overcome some barriers out of your experience in different markets, specifically for SMEs? Before we're going to showcase of one of our SME customer, can we do this, Mr. Riyad?
Hi, Wasim. Thank you very much. Indeed, and look, I was listening with a lots of interest all what was shared by our brilliant speakers, and look, it was already raised an important points. I think we need for promoting innovative financial solution, we need champions. And Al Baraka demonstrated what means having a champion in the financial sectors, and one of the most sophisticated in the region, the Turkey one. I think our colleague Yavar spoke about very important point related to your question. We know that climate finance can open through Islamic banking, also the retail segment, the SME segment. When we talked about the greening economy value chain, the role of the banking sector and the capital market, my colleagues also spoke about the taxonomy, about sharing knowledge, about alignment with market opportunities, and all of this is already smartly and innovatively supported by Islamic finance institution. Look, you asked me to provide example. Asset-based lending, it's one of the most famous solution. You can talk about Ijara, where it's a topic that it's highly linked to the access to the equipment related to the sustainable finance and the climate finance agenda. So Islamic finance in both capital markets and product offering, they are leading in many markets the agenda. But Wasim, to make the Islamic finance play an important role for the specific sustainable SME finance agenda, it's not only about the Islamic finance capabilities, because today, when we talk about the sustainable agenda in general, or the sustainable finance agenda, we talk about several topics. Number one is the awareness and the readiness, because it's an area where there is a need for compliance. It's an area where there is a need for reporting capabilities. And it's also an area where there is a need to tackle and to tap in the market opportunities. And we realize globally, and mainly in the emerging market, that specifically to this segment, to the topic that we are discussing today, the sustainable SME finance or the sustainable climate finance market, we realize that the readiness and the assessment, it's at its beginning in the emerging market, and there is a lot of work. I'm impressed by what Al Baraka shared, but this is a quite sophisticated offer, and we love to have more banks championing what Al Baraka is doing in Turkey. So Al Baraka is really the way to go. But we are still at the beginning in many financial sectors. The topic is not new, but the readiness and the awareness of many financial institutions, Islamic and non-Islamic, it's still the variety is large. You can still banks, they are still thinking how to engage in it, and there is banks, again, I repeat myself, like Al Baraka, where they are already extremely active in what they are offering. The second topic, I think, to make the Islamic finance more active is to try to identify champions at the country levels. And like I said, in Egypt, we have champions already. If you take the market in Egypt, I think in Egypt in general, we've seen the first into 2020, the first sovereign bond issued at the market level. We saw also the first green bond issued by a bank in 2021, and we are seeing the market, really the financial institution market in Egypt, supporting mainly the climate finance infra market. So in Egypt also we see a huge appetite, and we see champions rising to lead the climate finance agenda. And believe me, if we like to move, because the climate risk, it's part of the large risk that can impact the entire country, not only the financial sectors, but where the financial sector can play an important role. We are glad to see this direction in Egypt at the macro levels, at the infra market investment levels, and we see the emerging of many banks and dimensions that in the region. The green bond issued by a bank in Egypt and the sovereign one was part of the first initiative led in the market. The greening of the financial sector led by the Islamic finance players, but in general is key. And is key for many reasons, Wasim. Is important because we need to ensure accurate measurement and articulation of the impact of intervention. And that could only happen through the joint effort of our stakeholders. When we spoke about taxonomy, it's something that needs to be led by the regulatory body in the financial sectors, that needs to be implemented by the entire financial sector's players, but because it goes beyond the impact of the champions. We need to see the impact coming from the entire financial sectors to achieve results. The third topic is Look, again, back to Al Baraka, they went beyond improving their measurement capabilities, and they went beyond their compliance requirement, and they transformed the climate finance on a real lending agenda. That's what we need: more active finance institution in addressing the emerging systematic risk for themselves and for their client. And look, maybe to make it simple, when we talk about the SMEs, look, and I will close by this. If you take, Yavar spoke about the importance of the value chain, and I try to make it real. This climate risk impact. I'm Tunisian, and in Tunisia this summer, there is many fruits disappeared from the market because the farmers lost almost all their harvest because of the extreme heat that the country faced during 1 week. And that is the reality. And the farmer that lost his harvest because an extreme climate risk situation, and the climate risks, by the way, were nicely shared and exhaustively shared by our colleagues from Al Baraka. That kind of climate risk transform an SMEs or a farmer from a farmer to a poor man or woman, because they will lose their entire source of income. And that's why I think on the SMEs globally, they suffer from limited resources and awareness. I give you an example. Wasim, in Africa, the needs for the SMEs in terms of access to finance represent $331 billion in Africa. And we know that they are all suffering, like I said, from both access to knowledge and access to finance. And this is where I believe Islamic finance, banks, but the financial sector in general has an important role to play by increasing the SME knowledge and awareness, by providing tailored financial product and offering, and by also accelerate the SMEs energy transition, because this is all about the climate risk at the end of the day. And look, to conclude my points here, in summary, the priority will be for financial Islamic banks, or for the financial sector in general, because the Islamic banks, they are part of it, and they are playing an important role. The priority will be to support banks, all of these banks, in developing and presenting the right products to SMEs, and measure exposure on climate risk and define climate risk management strategy. And we should not forget that these kind of solutions related to climate risk will not only help the SMEs to resolve the access to finance, but behind it, we are, through, for example, let me continue on the agriculture, because it's key. Food security is another big problem that we are dealing with. For example, if you take solar pump irrigation, again, it's an asset-based lending solution. It will resolve the problem of access to energy, and in the same time resolve the access to finance. So this is what we see, Wasim. The Islamic finance, it's a big offer in our region. It's important, but we need to acknowledge that any expected real impact on the climate finance agenda at country level require the involvement of the entire financial sectors, and needs definitely champions like Al Baraka and Turkey everywhere. And I believe that in Egypt, we are in the right direction. We have a large project with IFC in Egypt. We have a $5 million advisory program to support the climate finance agenda on the financial sectors. And like I said at the beginning, I will conclude with it, we are glad to see that $750 million were really raised as a first sovereign bond, climate bond in Egypt. And we see one bank starting already doing it and others following up. I will stop here and happy to make a follow-up. Thank you.
Thank you so much, Mr. Yad. Actually, this was really helpful even for me for updating my knowledge and my information. And now I will be moving into different area after we have listened to multilateral developmental banks like IFC, experts in ESG like Dr. Sina, and we had a real case on the ground from a financial Islamic institution bank like Al Baraka Turkey. Now we will be listening to Dr. Hatem Al Gamal as an SME customer who have been impacted from all of these, and how do they see the challenges in this market right now, and how we can get benefited out of these kind of discussions. Dr. Hatem, it's over to you.
Hello, ladies and gentlemen. I will share my screen to share my demo. Can you help me with this, Ahmad? Can you hear me well?
sir. We hear you. Please go ahead.
Okay. Okay. Could you see my presentation? Because I'm sharing my presentation. Okay, Ahmed, please share the presentation, the previous one that you have.
Can we share? Can we share Dr. Hatem's presentation, please?
Okay. Okay. Until we share the presentation, let me start. Okay. Simply, we are at Empower. We started our operation in 2014. We started normally our operation as one of the biggest challenges always is the organic waste coming out of all of the operation in Egypt. So we adopted the biological management of organic waste. The biological management of organic waste, and we are organic waste experts that we can transform the organic waste itself to produce four main groups of products. The first one is energy, which is really established worldwide, and we talked about this in the presentation, which is mainly electricity, gas, and it's really important in these days to find alternative of natural gas using this resource, which is the organic matter. Another thing is the fertilizers, and this is our main added value across the world, which is how could we transform the organic waste into total different new concept of fertilizers, which we so far generated 3.1 million tons of crops using our products. The other thing is energy. The last thing about our ability is to generate the animal feed out of this organic waste, which was we had several success stories in Egypt using our fertilizer. Could anyone share my presentation, please, so I can start?
Dr. Hatem, we might have some technical issues in sharing the presentation from your side. So can you please complement of what you have said regarding what you have been achieving on the ground, and also what is the most importantly for us of what kind of a challenges that you are really facing in your real business, because we really want to address the challenges.
Okay, I will address mainly the challenges of the presentation here. Okay, but we have to at the beginning to understand what is the impact of financing such because, as you know, SMEs and are the best one to develop solutions that which suits the challenges per country. Okay, so having and doing business in fertilizers, which impacts the agriculture business at the same time, energy, and eventually the reduction of 73,000 tons of carbon emission so far, with an annual increase of carbon emissions. We're talking about 73,000 tons of carbon. This only comes when you are able to handle and to structure a relatively good operation. So let's go directly to the four roles that we play in the reduction of and the climate impact. We simply reduce the carbon emissions. We are replacing the mineral fertilizers using our technology, enhancing the soil quality, food quality, and decreasing the requirements of water per acre. And the most important new concept, which will really change the world, will be through carbon farming and the addition of carbon to increasing the carbon content of the soil, so the farmer himself can reduce the emission. And this currently is moving really well in the States, and even farmers can have relatively good the carbon emission reduction during the farming. So we're adopting these 4, which directly impacts 12 out of the 17 SDGs that require goals by 2030. Okay, so to achieve this, that was not an easy mission at all. We faced a lot of challenges at the beginning. The only solution that we had was you have to tie your shoes yourself. So we put a lot of equity out of our resources. Financing challenges wasn't easy at all at the beginning. And if we're going to summarize why we're facing this, you will find that we have 4 more main groups of financial challenges to able to achieve this. The first one was access to finance. It took us almost at the beginning 3 years to find financial institutions that can finance us, especially and the beginning was by the EBRD, at which they help us in the beginning in the technical studies and the financial studies, and then we're able to be financed from Bank Masr, eBank, and Al Baraka to start our operation. Okay, now I can find the presentation. Okay, I think you can go directly now to slide number 14. Okay. So when we're talking about, I covered this part already, the reduction of carbon emission, replacing mineral fertilizer using our developed products, reducing water usage in farms by from 4 to 6%. This is what we achieved so far, which can be increased up to 10% of the normal reduction because huge reclamation in lands, and finally carbon farming. All of this can be achieved by our solution. So next slide, please. Next one, please. One of the best things that to achieve this is that we're adopting circular economy and we reduce the plastic use by 98% in our operation, which was a really big challenge at the beginning, and the customer to adopt this in regards to the normal operation of using their packaged products. And we are selling, as you see, our product, which is liquid format. We pump it directly into the pivot irrigation, and then we have our operation, and this car goes back and forth so they can have their operation. So developing this solution took us actually 3 years for our operation. And here was the challenge. The main challenge is poor understanding. Next slide, please. Poor understanding and knowledge about the financial market took us a while. The banks that were able to have financial international financial institutions finance such projects are the ones that were able to participate and to help financing our projects. As what we achieved so far, each dollar that we financed, we're able to reduce 46 kilograms of carbon emissions over a course of 10 years of operation. So all of this happened once we were able to build our plants. Okay, to reach this point, we faced 4 more groups of challenges. Next slide, please. These challenges are an access to finance. To build such a solution, first of all, you will need technical assistance and incubators from impact investors so we can find the solution itself. And that wasn't available at the beginning, and we had to do all of this ourselves. One of the biggest challenges is such project always is being held and managed by SMEs department in the banks, which they have a relatively weak experience and knowledge about how to build and support such projects. So normally we face normal operation, although such projects needs its own way and its own experience. And the most important part is to be managed by project finance teams, not from managed from normal SME operation. The other point is an operational grace period that we had, which meets and matches normal projects. Sustainability always needs some time so that the market can develop and adapt for the challenges and the changes from normal operation, as I mentioned in the circular economy part, to the more sustainable, climate-friendly solutions. As simply, if we were able to manage the 9 million acres in Egypt to be able to adopt only 12% of the normal fertilizers using such new project, we will able to reduce 9 million tons of carbon emissions in the carbon farming only by such adoption. So we need to enable such companies, such solutions to be in the market and to grow these operations so we can have with a profitable operation a positive impact on the private on the climate on the and at the same time on the environment. Impact investment. I was really happy to know that Catalyst now is will be one of the impact investors in Egypt. Impact investors are really not easy to find in Egypt. The access was not there. Luckily, in the last 2 years, we started to have some operation from them, and we started to have several search for impact investors, so we can expand not only in Egypt but even in the MENA region and diversifying our portfolio. Because now, as the water solutions, because our customers are growing their crops in the new reclamation areas in the desert, so they are paying a lot of money to generate electricity using diesel itself. So the financial challenges was the period of developing the solution needs some structure and incubators and grants to be able to have sustainable operation. The second part, the management itself of such portfolios in banks should be done by a team with a relatively well-educated, they have some experience in such fields, and always be with project finance. And luckily, that in the CBE in Egypt has issued that sustainability department will always be there in all the banks. And adding to this, a proper impact investors incubators, so that all SMEs will be available in the market. One of the biggest challenges that we had, and it took us actually 5 years to reach one of the carbon creditors for our solution, was the carbon credits. It took us so far 4 years, but 5 years, sorry. But finally, we reached this. This will totally change and enhance the feasibility and the bankability of such projects. So there should be the financing should be able to offer such solutions. And at the end, a proper governmental sponsorship to such projects. And it was really late in Egypt, and it was not there so far. Hopefully, after the COP27, we will find a proper, stronger sponsorship that will be able to move and relieve all the challenges that we're facing, so that we can build our projects.
Thank you so much, Dr. Hatem. And actually, you have touched base on the investment impact fund, and this will move to our next speaker, Mr. Abdelaziz. Mr. Abdelaziz, Dr. Hatem have mentioned that the importance of having an investment impact fund dedicated for SMEs. So I will ask you, have recently launched the first impact SME fund in the MENA region, actually not only in Egypt. What was the motivation behind choosing this impact investment as the main theme for the fund?
First of all, I just want to thank Bank Al Baraka to having me with you guys, and also to thank Bank Al Baraka for taking the initiative and becoming one of the real believers of actually impact investing by putting it in practice, by investing to become one of our prominent investors in the fund. So I would like to share the thoughts of getting into impact is basically, I would like always to say it very simply, the difference between giving someone a rod to fish rather than giving him a fish. So this is an example I always mention it because basically that's what distinguish between impact investments and CSRs. So impact investments, in general speaking, is like what made us motivated to do that is to not only to look at the returns, which is basically it is attractive in terms of investments, but also what made us think of it is how to give back to the whole ecosystem, and how we are, as Catalyst partners, we're very believers since our launch, and to give back the whole ecosystem and to get indulged with in the SME space, because we believe it's the pillar of any emerging market. Having said that, we've been working with, we faced a lot of challenges, and actually to convince and to basically to distinguish between impact investments and other investments, which we believe is the future for any emerging market, and also the whole, the globe, which is basically follows the 2030 SDGs. Based on that, we partnered up with UNDP to become, as you mentioned, the first impact investing fund in Egypt and the Middle East, with partnership with UNDP to put it in practice. We've been developing a very specialized tool of impact for the Middle East with UNDP. Hopefully, we're going to launch it very soon. We're going to announce it very soon. And on top of that, we just launched our impact fund, and we're going to start, as you guys mentioned, and even Dr. Hatem mentioned, that the space of impact and actually looking at investments in a different perspective, not only looking at the returns, but also how to give back and how to follow the SDGs and the tool itself. We're putting it in practice. And recently we just launched the fund, and hopefully before the end of the year, we're going to start investing and participating in the market. I hope I answered your question. So, yeah.
Thank you so much, Abdulaziz. Thank you so much. And now I will be moving to different angle, which is very important area actually. And we do have a lack on this in the Egyptian market, and we need to get more knowledge about different experiences from different markets. That's why we have Mr. Matteo here, and I will be asking very specifically about how do you evaluate the ability of green microfinance projects in the region to meet the need for renewable energy and overcome cost and technical challenges? Because actually Islamic microfinance is it's a very interesting topic that we really need to have a kind of a knowledge and background about it.
Thank you. I also want to thank Al Baraka Bank for inviting me to the panel. Good question. I think first it's important to mention that we see different types of green microfinance projects in the region. There's the more, let's say, typical Sharia compliant green financing for micro and small enterprises to finance renewable energy. This could be the purchase of solar equipment, green housing materials, for the very small or micro clients, maybe solar lanterns or stoves and so forth. But there's also increasingly a new model that leverages digital technology to finance solar products, and it's called the PAYGO model, which stands for Pay As You Go. And the most famous of these being M-KOPA, which operates throughout Africa. And this essentially enables low-income households to access solar products through a kind of asset finance, whereby the buyer makes these very small payments, and it's often via digital channels or mobile money, for example, until they eventually own the product. And since the solar product is actually equipped with a microchip or some kind of mechanism for shutting it off, you have a good way to control that any payments, if they happen to be missed, then the product can be shut off remotely by the microfinance institution. So I think those are the different types of projects that we see. Now, if you ask the key factors for these projects to succeed, I think number one, we have to talk about making sure that there's a proper business model. And I think DFIs have to be careful when they use subsidies and grants for solar. I think these are important to help kickstart markets where solar is less affordable. But the flip side of this is that we've seen MFIs, given grants to subsidize the solar solution for their clients, which is fine initially, but this becomes unsustainable when the grants run out. And so you're destined to fail unless you make sure that you are sustainable from the get-go and that you are charging the appropriate fees to cover the costs, and that there is a market that clients can afford this and that you're capable to scale up. So I think proper business model is a success factor. I think sufficient market demand is very important. In some countries where there's heavily subsidized energy costs, these products may not take off as they're seen as too costly. So we had this experience ourselves in one of our microfinance projects in Jordan. But on the flip side, when we worked in Yemen, when the current war started, it really stressed the electricity grid, and there was limited supply and very high costs for energy, for diesel. And so there was actually, solar was coming in as quite an affordable alternative. And that's why there was an important market opportunity. And in Yemen, we worked with Al Qurami Islamic Microfinance Bank to develop and launch Sharia compliant financing for farmers and small businesses. For farmers, it was solar pumps. For small businesses, it was these solar kits that can help power the business, to keep the electricity running, etc. And before starting this project in Yemen, we did the proper market research. So I think that was a key factor. So we understood. We talked to clients. We talked to solar providers and suppliers. We looked at the market, the costs, and the dynamics. So I think this was very important and before launching. So market demand, and I think throughout Africa, there's significant energy deficits, high energy prices, and this is why it's been able to take off in many markets. And this is why IFC was able to launch their successful Scaling Solar initiative. And then lastly, I think in terms of overcoming the technical challenges, for example, our work with Al Qurami went beyond just developing the product and developing their internal capacity to understand solar quality solutions, to assess the client's financing requests at the bank. We also helped them to develop screening criteria for suppliers. So actually the solar equipment suppliers, making sure that you're not financing equipment from suppliers that do not provide high quality equipment. So screening criteria, a rating scale, constantly evaluating the performance and having proper standards to guide the bank in dealing with the suppliers and recommending suppliers to their clients. This not only ensures that the clients and the households and the farmers are satisfied with the solar solution, but also that the financing fees are repaid to Al Qurami. So it's a kind of a win-win. And today Al Qurami is financing. They have about 1,000 outstanding green financings worth about $15 million if you use the official exchange rate, which of course is different from the market. But it's become solar from going from 1%, 2% of their portfolio, mainly for their own staff, is now 20% of their financing portfolio in Yemen. So it's been a huge success and one that we're very proud of. So yeah, I think I'll stop there.
So what I have got from your speech, Matteo, led me to a point that I want to be directed to Sina, because if we are as an Islamic financial institutions, that we want to tap the Islamic NBFI's market for creating products that friendly climate. What are the challenges from your point of view, Dr. Sina, that will face us specifically in this area?
One is understanding what is business viable and yet climate friendly, because again, climate priority depends on the markup and the mix of prominence and expansion and size of different sectors. So it depends on the climate priorities and goals of the government overall, and the economic profitability or having viable economic models within specific sectors. For example, Egypt during COP has announced that agriculture is now an important priority sector when it comes to climate adaptation. There's not enough climate finance, especially addressing adaptation in Egypt. There is a considerable gap in this regard. Accordingly, now would be a very good opportunity to address or to consider take agriculture as a priority sector in this regard, especially when it comes to microfinance and SMEs, because agriculture is very important. It will ensure scalability and ensure that the adaptation-related finance reaches the most highest impact of its goals. This is one. Number two, having, as my colleagues previously said, having the appropriate checks and balances within the operational framework of the bank. Those who oversee the facility or oversee the financing of SMEs need to understand and have in place appropriate tools, not only to address climate impact, but also to assess credit viability of projects of SMEs that will be applying for such facilities. So there is a need for capacity building, putting in place checks and balances, understanding the repercussion of carbon tracking, utilizing or having a checklist to assess or to identify a project or an opportunity in the market as climate friendly. So it's a multi-factorial process that requires strong and close engagement with different parties within the market, which is, of course, regulators, and good skills, not only as a managerial, but assessment skills within the banking operation. So it'll be able to have this climate-proof impact and ensure that finance SMEs will not default, rather will have a viable business model. Thank you, Wasim.
Thank you, Sina. Thank you so much. Before going to the end of our discussions and opening the floor for questions, actually, I would like to have one minute remark from each and every speakers that we have today after the discussion that we have. So over to you, Avar. What is your final remark quickly?
The total climate finance gap that we estimate is around $4.5 trillion. It's therefore imperative that we tap every aspect of funding available to meet this gap. No one funding source can do it. And the great advantage of Islamic finance is that it is inclusive. So Islamic products, be they banking or capital markets, can essentially involve conventional players, but it doesn't work the other way. So if you have a conventional financing product, Islamic liquidity cannot be tapped. So it is essential to have greater, if we are going to have greater inclusion and tap the full liquidity pool to meet that funding gap, then Islamic finance has a critical role to play.
Thank you so much. Riyad, what is your final remark after you have heard to these discussions?
Look, again, thank you for this fantastic discussion, because we were able to hear from the entire ecosystem, including from the SME themselves. And come back to the SME presentation, I believe there is, we have a responsibility all. We, the IFC, we are pushing really the agenda. We are taking the lead globally on providing investment solution, on providing capacity building to the financial sectors, to green the financial sectors. And mainly, we are all here today to address the SME needs, access to finance, access to knowledge, and to ensure that this climate finance agenda will not be limited, as I mentioned in my previous intervention, to compliance and reporting capabilities. There is markets opportunities, there is green value chain to tap. And I think that without the coordination and the work with this, what we represent today, the ecosystem in this panel, I think we will not go far. So it's again an invitation to all of us to work together. And thank you, Wasim and Al Baraka, for leading this initiative, because that's how we can all progress. Because at the end of the day, we will all face the macro will face it, individually we will face it, our SMEs will face it, our financiers will face it, the climate risk is a reality. And I gave a personal example on the agriculture sector in Tunisia. So thank you.
Thank you so much. Mr. Abdelaziz, what is your final remark that we have today?
I voice out what Riyad just mentioned is thank you guys for putting it together, like for the whole ecosystem to be onboarded from different segments. On top of that, I just wanted to highlight the point of I'm very glad to see that there's a new initiatives and across the globe that people are pushing towards SDGs, and actually to not only to think of only materialistic or just to think of returns, but actually look at how to benefit from the whole ecosystem. And as Riyad mentioned, it's very, very important that in case of the crops, and now we're facing the global recessions and the trades issues and obstacles that they're facing. So all the stakeholders need to come together to be able to participate in order for the whole markets to back again to start becoming more healthy. So thank you on that.
Thank you so much. Matthew, what is your final remark after we have this kind of discussions?
Well, I agree with Sina's point around MFIs being key, I think, to reaching micro and small and medium enterprises. I think it's very important to reach out to MFIs, which are more connected to the rural and vulnerable communities, and also to leverage technology to do so more efficiently, because there are more innovative solutions available today, more than ever before. So not overlooking them in favor of the bigger projects that maybe serving the bigger corporates, which of course are important, and scale is important too. And then I think also just a thought that occurred to me is not to stop by just looking at the financing, but also to look at things. There are other innovative solutions around weather index insurance, and coupled with financing to really lessen the risk to farmers, to rural communities. I think it's important not to forget different types of insurance or sukuk. Thank you.
Thank you. Mr. Sefallah, what is your final remark in a minute? It seems there is a connection problem with Mr. Sefallah, so I will go directly to Dr. Hatem. Dr. Hatem, as you are the final one to have your views, what is your final remark?
Okay, in terms of my remark, what I can see that is having a well-structured bankable solutions for the SMEs in working on the sustainable business. This is the only way that we will be able to achieve our goals. So as per our challenges, the emerging markets have a lot of potential that is not untapped, that we need to be having a well-structured ecosystem that will put support from the beginning of the technical support for the solution, and at the same time in the banks and the financial institution solutions themselves, so they can understand how to support these SMEs, and at the beginning to have the governmental sponsorship to gradually change to be there to support the gradual change of the mindset of using normal techniques, because normally when you talk about climate change, everybody thinks directly to solar solution and using electricity instead of fossil fuels. This is only one part of the solution. There's a big ecosystem that we need to be developed, changing the mindset. For example, our operation of building these biogas plants, we have 4 biogas plants, and having all of these challenges made us face a lot of challenges in the beginning. So to be able to restructure this and solve all of these solutions, we need to have a well-structured approach for climate change, especially having ready-made programs to support these companies. And these solutions coming out of the SMEs, from testing the solution itself in the market and having proof of concept, to bankable on operational projects in the market. That took us ourselves 4 years. Imagine if we're talking developing new solutions, etc., etc., etc.
Thank you so much, Dr. Hatem. Now, actually, after this kind of rich discussions from different point of view, I will get back to the purpose of the panel of building a holistic approach, a comprehensive framework. We want to be part of the ecosystem that has multilateral developmental banks and their role in developing Islamic finance towards sustainable finance and addressing the challenges and opportunities for SMEs. After having this kind of views from an SME customer that is working on the ground, a financial Islamic institution like Al Baraka Turkey, SME expert, independent expert in ESNG. So I'll get back to the purpose of the panel, that we want to be part of the global ecosystem, that we want to be part of building a holistic approach for implementation, because implementation is the key, and that's why we're addressing different types of point of views from different aspects in order to have the holistic approach. Again, I would like to express my gratitude and thanking our guest speakers and thanking all the audience that have the time with us today. And thank you so much, and hope that you are enjoying the final days in the COP. And thank you